All right, let's take a look at mastering payroll. Um, with it, an overview of the payroll taxes would be that the amounts paid to workers or employees may be subject to the following withholdings and taxes. When you look at this, we have federal income tax that is mandatory. State income tax withheld is mandatory, and certain localities, cities like Kansas City, St. Louis, have a local income tax withheld, and it too is mandatory. So these three are mandatory. We have employment taxes such as the Social Security and Medicare, and they're mandatory for most. We also have the unemployment insurance taxes that may be required depending upon the state, and some states also levy a state disability insurance withholding. So we need to look at how a worker is classified. Employers may be responsible for withholding and depositing these taxes, and in addition for paying employer payroll taxes. So when we look at the payroll taxes that are employee paid, that would be the federal income tax withholding, the state income tax withholding, and for some it would be the city income tax withholding. Those are withheld from the earnings of the employee. There's also the employee FICA tax. The FICA stands for Federal Insurance Contributions Act, passed by Congress. And the FICA tax consists of two parts: the Social Security tax, which also is OASDI, the Old Age Survivor Disability Insurance, at which the rate now has reverted back to its original of 6.2%. There for a couple of years we had a tax holiday on this of 2%, but right now 6.2% in 2013, and that's based on the employee's first $113,700 of wages in a calendar year. Payroll runs from January 1 through December 31st. Then the second part of the FICA tax is the Medicare tax. HI stands for hospital insurance. That rate is 1.45% of all the workers' wages. So you would be taking the 0.0145 times what the gross earnings are of the employee. For those workers, those employees who are paid over $200,000 in a calendar year, there is an additional 0.9% Medicare tax imposed. Other taxes are employer paid, such as the employer is going to match the two parts of FICA. The OASDI, the Old Age Survivor Disability Insurance, is 6.2% with that same ceiling limitation, and the HI, the hospital insurance, of 1.45%. So these are matching what the employee is having deducted from his or her paycheck. Also, the employer will have to pay federal unemployment insurance called FUTA, state unemployment insurance that they're calling SUI, S-U-I, state unemployment insurance, the acronym, and SDI, which is state disability insurance. So when it comes to the state, we have to look at the particular state to see what is required. States are able, they differ. They're able to set their own laws. Now, the types of workers we're looking at here, we have common law employees. Common law employees, well, this is an employee if the individual passes the common law test. And therefore, if they do, then they're treated as employees for payroll purposes. And you can see that listing in the text. Statutory employees must pay their own FICA and FIT. So they have to pay their own Social Security and Medicare, as well as their federal income tax withholding. They're going to have to do that independently. Neither is withheld by the employer as part of the payroll. Statutory non-employees, well, these are workers who are not employees of the business. And then independent contractors, these are also not employees of the business. temps from an agency, well, if the business hires, or I should say, contacts the temp agency for some additional workers, those employees are employees of the temp agency, not the client firm. So all payroll deductions and obligations then go back to the temp agency. Leased employees, well, these two, when a company is leasing employees for peak periods, extra work, then these are employees of the leasing agency, not the client firm. All right, we're going to go back through these. The common law employee, a worker is a common law employee if the employer controls who performs the work, what work will be done, how the work will be done, when the work will be done, where the work will be done. Now, if there's any question as to a worker's classification, then there is a form, an IRS form, SS8. So it's the Internal Revenue Service form SS8. You can obtain this by going onto the irs.gov website and fill this out. The IRS will then classify the worker based on how the employer answers those questions on that form SS8. Now, common law employees are workers for whom you must withhold federal income tax, state income tax, employee FICA, which is the two parts, the Social Security OASDI and the Medicare HI. So the employer has to withhold these taxes on wages and other payments. The employer is also required to provide that year-end W-2 each and every year. So it runs from January 1 through December 31st, and then by the end of January the following year, this W-2, the form showing taxable wages and all the taxes withheld and other deductions, are required to be shown on there. We also, the business also has to pay the employer matching of the FICA and other employment taxes such as federal unemployment tax, state unemployment tax, and sometimes state disability insurance. These amounts to be paid, whether withheld from the employee's paychecks or paid in addition to employer obligated taxes, they have to be paid in periodically to the Internal Revenue Service, to the State Department of Revenue, to the city, or to other agencies. So they're paying in both the employee taxes and the employer taxes. That's the business's obligation. Now, statutory employees are drivers who are the employer's agent or are paid commission. They're full-time life insurance sales agents working primarily for one insurance carrier. So like State Farm, if you're just representing State Farm Insurance. Certain home workers, full-time traveling or in-city salespersons. And when we look at the statutory employees, they are subject to FICA and FUTA, so they're subject to the Social Security, both parts, and the federal unemployment tax, but not to the federal income tax withholding. And when it comes to states, such as state income tax withholding, state unemployment insurance, state disability insurance, you're going to have to look at each state for their laws. Now, we're still going to be reporting on these statutory employees and providing them with a W-2 for the calendar year. They'll just be marked as statutory employees, and any withholdings that are not covered under payroll, the statutory employee will be responsible for on his or her tax returns. Statutory non-employees are direct sellers. For example, those who deliver and distribute newspapers or shopping news or sell consumer products in the home. Licensed real estate agents, companion sitters, and when it comes to statutory non-employee taxes, there's an exemption from FUTA, federal unemployment taxes, FITW, federal income tax withholding, and FICA, the Federal Insurance Contributions Act for the Social Security and Medicare. So these are not employees of the business, and therefore these individuals are responsible for all their taxes. So as far as the state employment insurance, we're making a notation here that will vary by state. So anytime the state is involved, you're going to have to look at that particular state, whether it's Missouri, Kansas, Arkansas, Oklahoma, or any of the other states. Independent contractors are workers who control the methods and means of their work, perform services that are not integral to the trade or business of the company using them, do not have federal income tax, state income tax, or FICA, that's the Social Security Medicare, withheld, nor do the FUTA, the federal unemployment taxes, or the state unemployment insurance, which is still a tax, apply. So, but if an independent contractor fails to provide a taxpayer identification number, a TIN, taxpayer identification number, or an SSN, a Social Security number, then the business is responsible for withholding what is called a backup federal income tax, and possibly the state may also require a backup tax be withheld and sent in. The payments are reported to independent contractors not on a W-2, but on what is called a Form 1099-MISC, which is a 1099 miscellaneous. And the independent contractor then is responsible for all of their taxes. So they'll have to make quarterly withholding payments on their own, pay it in and report it with their tax return. Temporary help agency referral. Temps are workers who are employed by that temp agency. They work at the client company on a temporary basis. The federal income tax, the FICA, the Social Security, the Medicare are not withheld by the client company. They are actually an employee of the agency, the temp agency. So however, here's the thing, if the agency fails to pay the employment taxes, then the client firm may be responsible for these taxes. Leased employees are employed by a leasing agency and work at the client company, and the client company can hire or terminate them as it sees fit. The federal income tax, the FICA, the Social Security, the Medicare are withheld once again by the client company. They are the agency's employees. So they're considered the leasing agency's employees once again. If the agency fails to pay employment taxes, the client may be responsible for them.